So I'm so thrilled to be today with my great friend, Matthew Jones. Matthew is a venture capitalist, I guess, within Anthemis, with a focus on insurance and risk management. And I'm so jealous because Matthew was able to go to the United States just a few days ago to go and see some of our friends, but really participate to one of the largest insurtech conference in the world in Las Vegas, where he was able to validate, evaluate, and see some of potentially young ventures he will be investing in the future. So I know Matthew for the 6 years through his work at Swiss Re, because at the time, Matthew was one of the sponsors of the accelerator and one of the most active mentor, engaged assessor, and investor. I think we both learned a lot from our acceleration time. So Matthew, you have been 5 years in Anthemis now, I think. So who are you and what do you do?
Thank you, Sabine. I didn't realize it had been that long that we'd known each other. You're absolutely right. I think we did both learn a lot in the accelerator time, and I hope I wasn't too much of a pain when you say that I was one of the most active members. I hope it wasn't too painful to have me coming along every now and again.
Not at all. It was fun
to spend time with the startups. Yeah, almost 5 years at Anthemis, and it's gone very, very quickly. I've had the time of my life, frankly. I was very, very lucky to be able to make that shift from the reinsurance industry to venture capital. And I remember when I was looking to join Anthemis, and I think I've shared this a few times, but I think at the time Anthemis was looking for someone who had been in insurance for just about long enough to know how it pieced together, but hadn't gone native. And bless them, I managed to convince them that I hadn't gone native and that I was their guy to try and figure out which startups we should be investing in over the next few years, and haven't looked back ever since. So it's been a fantastic experience, that's for sure.
So great to hear, great to hear. So tell me, Matthew, tell me a little bit more about Anthemis.
So we are a venture firm focused on financial services, founded 11 years ago. We are actively investing in companies that represent the future of financial services. Now, if I think about our investment thesis, at the core of that investment thesis, for example, are new banks, new insurance companies, the traditional FinTech propositions that we all see in TechCrunch, for example. But in addition to those kinds of businesses, we're also actively researching, exploring, and investing in several adjacent industries where ultimately we believe that the technology will intersect with financial services at some point in the future. And to bring that to life for a second, some of those spaces include things like energy and agriculture, mobility, health, prop tech. Now, at Anthemis, I focus on our investments in insurance and risk management. And what's really interesting about those adjacent spaces that I just listed is that they're actually all affecting insurance, and insurance has got a role in all of those different spaces, whether it's the changing shape of mobility and how we get around, whether it's about the use of technology in health contexts and diagnostics and treatments, or where we live and the kind of the built environment. Just to steal something from Swiss Re, I think it was in the 70s that they first said this, without insurance and without reinsurance, nothing really happens. And I think it's only when you get to kind of be looking at these new businesses that are just emerging that you kind of realize that that's actually pretty true. Insurance is everywhere, which is great for me as someone that's kind of a little bit strange and a little bit obsessive about insurance. Yeah.
So you actually highlighted something very major. So when I read, the elevator statement on the Anthemis website, you said we cultivate change in the financial systems. And so for me, that means, as you said, it's connecting FinTech, InsurTech, but with everything else, because we need insurance and finance to do with property, real estate, as we talked about a little bit earlier, with automotive, which is changing so drastically, as to commercial lines, right? Energy.
Financial services is really the lifeblood of the economy of the world, and I think we recognise that it's not perfect, and there are plenty of opportunities for improvement. And so when we talk about cultivating change, everyone at Anthemis has got their own kind of interpretation of it, and I think for me it means we're prepared to back genuinely different and disruptive ideas that perhaps others aren't, because we come from because the team that we have here comes partly from financial services and partly outside of financial services. We try to blend those two different perspectives into, thinking creatively about how we back new companies and sometimes people that have a very different perspective on how to solve a problem or how to get something done. And it's only through doing that and through, for example, backing up underrepresented founders that I think you can actually cultivate the change that we think is needed. And I think we don't just say it. I think we back up those words with actions too.
That's superb. So tell me a little bit more about Anthemis strategy. What are your top themes beyond the industry you support?
Yeah. So maybe to start with, where do we invest and when do we invest? And we historically have been an early stage investment firm that has invested at the pre-seed, seed, and sometimes Series A stages. And we've invested in about 120, 130 new companies over the last 11 years that have all been at those stages. Last year, we added a new growth fund to the firm, which is enabling us to invest at Series B and C. We're now 4 investments in, soon to be maybe 5 and 6 investments in. And so we are now backing companies that are going from the earliest concept stages all the way through to kind of growth stage. So that's perhaps the first thing to mention, that we've kind of had an evolution over the last few years. In terms of the themes that we have been really interested in, I think we break up financial services into 7 different parts. So think of that along the lines of personal banking, corporate banking, wealth management, insurance and payments and so on. And I think insurance has been a real focus for us over the last few years. So that's largely been driven by our observation that we can clearly see that there is no part of insurance, there is no part of the insurance value chain that we think is immune from the effects of technology. But there's no question that a lot of lines of business in insurance have managed to swerve technology, and they've kind of managed to dodge it for a little bit of time. And I think that's coming to an end, and I think the effect of technology is really kind of coming to bear. So I would say that's clearly one of the biggest topics that we've spent a lot of time on. And then if I think about the kind of other themes that have really kept us busy, one is definitely climate, and more recently topics like ESG, and thinking through the impacts of those products in the market, and understanding and also the kind of the risk around them has been a really interesting kind of space that we've explored, and also as it relates to energy. So those are kind of spaces that we've been really excited about. And then one that I mentioned earlier on that we've spoken about a number of times, which is mobility and automotive. And despite what has happened over the last 18 months with COVID, and we've all been stuck at home, I think as I saw when I was out last night in London, people are back, people are out, and I think we now again are rethinking what is the future of mobility, and how does that interact with financial services, how does that interact with risk management, but more generally, what does it look like, and what is the future for getting around? And I think that's it's very much an open question, but it's a fascinating one that we continue to be digging into.
So what does ESG means for Anthemis?
So I think where we've spent a lot of our time more recently is evaluating propositions that help, for example, asset managers better understand the kinds of assets they are investing in, whether it's something like this, whether it's equities or bonds, or whether it's something more nuanced than that. I think at the moment, what the industry is kind of acknowledging is that they don't, in many cases, asset managers don't really know a lot about the underlying of what they're actually investing in. And so we've seen a proliferation of companies. Admittedly, we haven't yet made an investment here, but it's an interesting space. We've seen a proliferation of companies that are trying to, I guess, decode the black box a little bit. And by that, I mean trying to provide a little bit more clarity around what people are actually owning and the behavior of those kind of underlying companies, for example. And I think that's a really interesting and exciting opportunity. It's clearly very nascent, I think. But I think we've seen this kind of this interpretation of kind of transparency really emerge in kind of various other spaces. So again, just to because I'm obsessive, to come back to insurance. So we've talking about both sides of the insurance balance sheet, not just the asset side where people, where insurance companies are investing the assets they're collecting into, are they investing them into projects and assets that are doing good or not doing bad in some cases, but also the liability side. Are they insuring the right assets? Are they insuring assets that are at least, maybe there is no right or wrong, maybe it's just, are they insuring assets that are in line with their ethos, the culture, and then the kind of what they want to be backing. So I would say it's nuanced, it's broad, and it's still up for interpretation. And I think we're still figuring it out.
We are still figuring it out, actually. And one thing you highlighted between the two sides of the balance sheet is that what I've seen is some insurers have come out, for example, from coal, right?
Absolutely.
Insuring coal extractors. At the same time, on the other side, I see a lot of technology coming into our industry. And so when you look at energy companies moving from fossil fuel to renewable energy, needing to use technology, whether it's wind farms or solar panels and all the things that bring new emerging risk into the industry. And so therefore, a lot of insurers having to rethink.
And this comes, absolutely, and this comes back to what we were talking about earlier on, where insurance is really everywhere. And so it acts as, in some ways, the kind of conscience of society at large, in that, some insurance companies are pulling back from insuring certain risks, but it also acts as a really important enabler of new technologies. Take one of our portfolio companies, for example, Flock. I mean, they are acting as, they are matching emerging capacity in the insurance market with fleets of, for example, electric vehicles. And it's only because electric vehicles can get insured that they're able to be on the road and they're able to kind of proliferate. And with that will come additional risks like the charging stations and the infrastructure that comes with them. That's really exciting. And I think it's really interesting that financial services is as always kind of at the core of what's going on.
Yeah. So I want to go back to Anthemis. I read that you have three main pillars when you look at your execution strategy and your model: invest, build, and explore. Can you go into more details around those three pillars?
So we've never been a pure investment firm. So the story has kind of evolved over the last few years. So the invest piece, I guess, is kind of self-explanatory. We back exciting and innovative companies that we think represent the future of the industry, and we have done that for 11 years, and we'll continue to do that for the next 11 years and beyond. On the build side, we're very fortunate to have a partnership with Barclays. It's our Female Innovators Lab. It's an initiative to back female entrepreneurs who are trying to break into the financial services industry and building companies. And Katie, who runs that team and that lab, has done an amazing job in not just backing founders with cash, but also providing, I think, inspiration to people in the market and kind of inspiring people to believe that they can do it, right? And I think that's really important. I think there's been a total underrepresentation of female founders over the last, forever, frankly. And so the lab is doing some really excellent work in promoting the fact that female founders are just as backable, frankly, probably more backable than men, based on some of our experiences. And then on the explore side, this is really about staying at the forefront of what's happening in financial services. And that's not just about informing ourselves. It's not just about making sure that we are on top of the trends that are happening, but also ensuring that our partners and the LPs that back us, who are by and large, into a large extent rather, corporates in the financial service industry, helping them to understand what is happening in financial services, what is happening in technology, where are those two things intersecting, and how are you thinking about the future?
Yeah, thank you for investing and supporting female founders. It's interesting because we always talk about it, but we don't always know who are the investors really putting their money behind what they are talking about. So thank you.
So I think maybe just one extra thing on this. I think there are so many venture firms out there that are staffed by 10 men that look basically identical to each other. And I am incredibly fortunate to work with, on a gender basis, a perfectly balanced investment team. So, my colleagues, Ruth, Kate, Sophie, Georgia, are fantastic. And I think it's only because, it's because we've got a balanced team making investment decisions, I think, that leads to making better investments and having a better balance in our portfolio. The portfolio that I've invested in over the last 5 years with my colleague Ruth, about half of our portfolio is underrepresented founders, whether it's female founders or whether it's founders of different ethnicities. And I think we didn't go looking for them. We didn't find it hard to find these people. And I think that's nuts. And I think that, to me, there is no excuse for these venture firms that have got all male partners, all male CEO portfolio companies. It's not acceptable. It's 2021.
It's 2021.
So
thank you. So one thing as well, which came to mind when I read a little bit more about Anthemis, is your drive towards disruption, right? When we look at the 3 pillars of innovation, we have efficiency innovation, which is really much more on process, sustaining innovation, which is around the product and services we put to market. And then you have game-changing innovation, which is all around that disruption and really betting on the disruptive business models. How has that been for Anthemis to bet on disruptive business models?
So there have definitely been some examples in our portfolio that have been kind of truly disruptive. So, for example, right at the outset of the Open Banking Initiative, we backed TrueLayer, and they have made incredible progress in kind of democratizing access to financial data and facilitating a lot of the applications that we see out there in the wild today. And so, what I think is interesting about financial services is that it doesn't necessarily, as an industry, it doesn't necessarily lend itself well to totally disruptive propositions. So there are some out there, there are some examples. I remember being at Swiss Re, one of my last roles, and I remember we would talk about in our strategy steering committees and project steering committees, where is the Uber of insurance coming from? Like, what do we need to be worried about? And that was perhaps 7 or 8 years ago, and it hasn't transpired in the way that I think people expected it to, although I don't think anyone really expected it to. So disruptive opportunities are certainly out there, and we have some in the portfolio. I think we definitely see that there's an opportunity. It's as you described. There's an opportunity in we believe that there is plenty of opportunity to invest in all different types of companies. So yes, you've got the disruptive ones, but for example, given how much paper there is in financial services, still to this day, there is no reason why we shouldn't be backing exciting companies that can automate some of those processes, for example. So I would say, and I think in venture, I subscribe to this. In venture, there's this kind of rule of thumb that that companies should be targeting, something like a 10x better experience for a user, or 10x better return on an investment or a given process. And I think that's a good rule of thumb. And I think that across financial services there are so many spots where there are lots of companies still to be built that can deliver on that kind of target,
on that promise. Indeed. So you as an investor, when you evaluate young ventures, you apply specific criteria. What are your top criteria when you evaluate potential ventures which are going to come into your portfolio?
So I think sometimes I let people down when I answer this question, because there isn't some kind of secret set of criteria that we kind of keep hidden from entrepreneurs. It's reasonably straightforward. It does differ a little bit between, for example, pre-seed investments or seed stage investments and Series B investments. But at a high level, it's still to this day, and I'm sure there are dozens, if not hundreds of books that kind of go into this in a lot more detail: product, market, and team. And when you think about product, for example, it's got to be something that is genuinely different and interesting. And I really emphasize the interesting. I don't think I've backed anything that I've not really personally found, wow, that is really cool or interesting. Other investors do, that's okay, but it has to be something that grabs our attention. And I think we love things that we've never even thought of, or that we've never even that's never even crossed our mind. So that's product. Market, there has to be a large opportunity. It has to be a space where you can build a large company. And that's not because of, honestly, that's simply because of the model, the venture capital model. In a standard portfolio, you might invest in 20, 25 companies, something like that at the early stage. Some of those companies are going to do really, really well, and they're going to drive the majority of the returns for our investors. We are custodians of our investors' capital. Those investors are, sometimes pension funds, family offices, sometimes they're corporates. All of those people have expectations of us that we're able to deliver a return. And so the companies that we back have to at least have a chance of returning, generating a good return for the fund. And so that, generally speaking, translates into there has to be a big market opportunity there. And sometimes the challenge is the market doesn't exist today, and you're talking about a category creator. And in those cases, the investor has to have the foresight, the kind of sometimes downright just good luck to be able to pick one of those propositions. And then team. And I think if I look across our portfolio, the teams that we back are able to blend a mix of not just industry experience and financial service experience, or if they're in insurance or banking, whatever that might be, but also technology. If you're just finance people with no technology, you're just a traditional kind of financial services firm. If you're just tech, you're probably going to get eaten alive by other tech firms. So you have to have a blend of both. And that's what we expect to see in our teams. That has to be, that has to exist across those teams. And then if you can devise a proposition that ticks each of those three boxes, that's really interesting. And that's when you know, almost often after the first call, you know that there's something there. I mentioned at the beginning that there's a difference with later stage investing, and at the later stage, as compared to the early stage, where sometimes it's more about the idea, the vision, the excitement that you can build around a proposition. At Series B, there's a lot more data. And so you might still have the same excitement. You still might have that really exciting vision, but maybe it isn't materializing in the numbers. Maybe your idea isn't attracting the kind of customers or the amount of customers that you wanted. And so when we get to those later stage investments, we'll spend a lot of time digging into numbers and understanding what's actually happening behind the scenes. So no secret, no secret sauce. It's it's reasonably straightforward.
Yeah, but at the same time, you are happy to bet on category creators, market makers. And so I think it's also very important that sometimes market do not exist, and we need to put that financial model together and the data to actually see whether there is an opportunity out there.
So one of those examples in our portfolio, so a company called Stable that we backed a few years ago. So Stable, it offers index-based commodity price insurance. So if you are a farmer or a restaurant or a food wholesaler, you are currently, or a supermarket, you are currently exposed to commodity prices going up or down, and you have to absorb those price movements. Now, they devised an index-based, so parametric product that people could buy almost off the shelf that was very, very closely, if not perfectly, connected to the actual thing that they were buying, whether it's Mexican avocados or a certain type of Brazilian hazelnut. And nothing like that existed at all. And so when we first met Rich, the founder, when he came in, and when we started moving through the DD process, there was no comparable. You could, you'd look at Chicago and you could look at what's happening in, the markets there, but there was no kind of precedent for that kind of category creating company. And it's been very exciting to see them create this category, build this excitement with their customers. So yeah, sometimes it's very, very hard to know that you're onto something. But a few years later, when it turns out that there is something there, it can be very exciting.
There is one quote I very much like from Mark Anderson around, if you are going to be in a VC category, if you are going to be a venture capitalist, you need to look at the big bet, the bet which do not exist. And so therefore, you have to take, in some ways, a lot of risk.
Yes, that's correct.
So you mentioned that you look at the team and how the team is put together, I guess how it executes. Can you tell me a little bit more around leadership and culture and how important that is for you, not only within the startup environment, but you already touch upon that by looking and sharing some views around your team.
So when it comes to the companies that we back, culture and the beliefs of the founding team are a big part of our diligence process. Now, when we are doing diligence on a company, some of that takes the form of, for example, we have a questionnaire. It gets customized every time to every company. We have a set of questions that we want to ask that company. But there is one question that makes it onto every questionnaire, and that is, what is your commitment to diversity and inclusion, and how are you demonstrating this? Don't just write a paragraph about how you believe this. What are you actually doing? And then beyond that, we will then spend as much time as we possibly can with the team, not just to understand what do they think their cost of acquisition is going to be in 5 years, but how do you think about building a business? What is the philosophy that is guiding you as you go and build this company? Because we've all seen companies that have started as two-person startups and have become very, very large, kind of multi-$100 billion companies that don't necessarily have the right culture and haven't maybe gone off track a little bit in the past. And that's probably because they didn't have the right guiding principles at the beginning. And so we really spend a lot of time on that. And so again, going back to gender and things like that, is it an all-male founding team? Is there a balance there? Even in the C-suite, is there a mix of perspectives? Because it's not just about gender or race. It's, do you have people that come from different, for example, economic backgrounds, different geographies, things like that. And so we will kind of subtly kind of try to suss all that out, to figure out if this is, frankly, an entrepreneur that we want to be associated with. And some entrepreneurs don't care about this, and we're not going to be a great fit for them. But we find more and more that it is important. And they are, in many cases, the entrepreneurs are delighted to be working with the team that we have here. Well, specifically my colleagues, I would want to work with them as well. So it's something that's very important to us, put it that way. And then I guess the other thing I should add is it doesn't just stop at the point of investment. So once an investment is made, we then, for example, through the board, through our check-ins with the company, we will keep them honest, right? If they say that they believe in this stuff, and the last 6 hires have all looked exactly the same and exactly like the founder in question, well, okay, we should probably talk about whether we're actually living the values that we say that we have. And again, some entrepreneurs don't want that accountability, but we think it's for the best.
Vision, mission, values and beliefs. What you're saying is so important, because I've seen values and beliefs written on paper, but not adhered to. And so you work in an environment where you have those words on paper and you see the company, or the companies, not even aligning to those. Mm-hmm. And it's key to build any business, isn't it?
Absolutely. But I would also, again, coming back to what I was just saying about entrepreneurs and what they want, I think entrepreneurs should ask their investors, what do they believe in? How do they put into practice what they believe in? Have a look at their investment team. Have a look at the partnership. Is it a diverse group? Is it a group that has values that align with yours, and are they putting them into practice? And I think every entrepreneur has the right to ask those questions and to figure out if they want to align themselves and affiliate themselves with a firm that maybe doesn't have the same kind of values.
Very important. I work with my portfolio startups. So from the accelerator, accelerated over 100 startups. So they come to me when they want to raise money, and then we have to do the reverse, where we have to look at which investors are the best fit investors for that specific startup. And then I would say the same, you have to do the reverse DD, because you need to see whether you want smart money, right? You want to see whether you are going to like each other, because they are going to sit on your board, by the way. So make sure that you make the right choices in the reverse. Another point I think you actually highlighted as well, which is the team. Recently, I judged the top 100 insurtechs and stuff like that. And you know what? I spent a lot of time saying, Sabine, it would take, 2 hours of your time. No, it took 2 days of my time. You know why? Because I was reviewing every team and how diverse they were. And then, on the diversity column, like, Yeah. So I applied that as well, because it's so important. And I think the reason why it's important as well is when you look at the consumer, the customer of those ventures, even though they may have a B2B to C business model, business to consumer, the consumer is diverse, is changing, and they need to reflect that in their teams, I think.
Completely agree.
So corporate venturing, as you know, this is my current passion, and I really want to demystify what that means for a lot of people. And when we started actually engaging with one another with the accelerator, I was scouting, right? I was scouting for venture, looking for partnership. You moved into investing. So you're scouting for investment, but also you are building ventures. So what does that mean for you to be a corporate venturist?
So I think from an Anthemis perspective, there are probably two ways in which we interact with and enjoy good relationships with corporate investors. So on the one side, we are very fortunate to be backed by some of the largest banks and insurance companies and other financial institutions in the world through our venture funds. Some of them are public. For example, Aviva in the UK has been a long-term partner of Anthemis, investing in our first venture fund and then in our venture growth fund. So that's the first one, and then the second one is that we co-invest with a range of corporate investors who have their own direct investment strategies and who want to get involved with and support companies that are affecting change in the industries that they're involved in. And so I think over the last 11 years, we've done, I would like to think, a good job in partnering with the industry and in helping them to, not just deploy capital, whether it's into funds or companies, but also helping them to understand where things are headed in the industry.
Wonderful. So one thing I would really love for you to go into as well, when you look at venture building and the insurance companies and the corporates you mentioned you're working with, how open are they to look into that method?
So I would say, and this is a slightly more general point, honestly, financial institutions run the gamut in terms of openness. So I think the ones that work with Anthemis are the ones that are the most open-minded about investing, building, and that's great, and we're very fortunate. And they kind of self-select, right? The forward-thinking ones want to work with they want to be external facing. They want to work with external partners that can help them in a broader way with their strategic objectives. But no question, there are still various financial institutions around the world that are somewhat at the other end of the spectrum. I guess that's and let's be clear. If any one of them are listening right now, you are more than welcome to get in touch, and we'll try to change your mind. But I think what we observe is that everyone is on their own journey. Everyone is at a different point in their own understanding of what technology is, what it means, and how it's going to affect their business. And I think eventually you won't really have a choice. Because if you don't engage in some form, and if you're not open-minded, and if you're not external facing, I think, I was going to say technology, but I think the world is going to catch up with you at some point. And I don't mean to sound overly dramatic, but I don't think that point is too far away. And I think that's why we've seen over the last 18 months in particular, this acceleration. Yes, partly driven by COVID, absolutely. But I think over the last 18 months in particular, we've seen this acceleration of wanting to, digitize processes, access new customers, and so on.
So what would be your last words of wisdom for our listeners?
I think if you're an entrepreneur that is thinking about building a startup or is building a startup in financial services, give us a call, get in touch, drop us a line. The door is always open, and we would love to have a conversation with you. If you are a corporate in financial services that is thinking about what is happening in technology and wants to partner with a firm that is thinking across horizons 1, 2, and 3, please get in touch. And then finally, if you're an executive in one of these companies who is thinking about even moving into a startup, and you want to work for one of the companies that perhaps we've backed or another one in the industry, let us know, get in touch, and we will happily act as a signpost and help you understand what your options are. All of our companies recognize the incredible value of talent in the industry, already working in the industry, and we'll be happy to make those connections. the next few years are going to be incredibly exciting. The pace has never been faster, and I think that's great. So strap in. It's going to be a wild ride, that's for sure.
Fast pace requires amazing investors. So I want to thank Matthew Jones, Managing Director at Anthemis, for his time today and sharing so much with us. If you want to hear about Anthemis, www.anthemis.com. Thank you, Matthew.
Thanks very much.
If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.